Welcome everyone. Good afternoon. I'd like to welcome you to the conference for the media investors and analysts on the TAURON Group earnings, TAURON Capital Group earnings for full year 2023. Today we have a full management board with you that includes Grzegorz Lot, the president of the management board, Piotr Gołębiowski, the vice president of the management board for trading, Michał Orłowski, vice president of the management board for asset management and development, Krzysztof Surma, vice president of the management board for finance. Let me break the convention today, and I will ask the president, since I'm meeting for the first time in this group, to have a few words of introduction. Mr. President, let me turn to President Grzegorz Lot to say a few words of introduction, if I may ask. Good afternoon, ladies and gentlemen, dear shareholders, ladies and gentlemen, representing the media. For us, it's a great pleasure and honor and an enormous challenge. So thank you very much for the time that you are spending with us and for the capital you're investing in us. We will introduce ourselves in a moment, what we do, what we want to do. And since the most important thing is business, I will hand over the floor to my colleagues from the management board. Gentlemen, let's say what capital we have at our disposal. Ladies and gentlemen, welcome everyone. My name is Michał Orłowski. I'm the vice president of the management board for the asset management and development. My background, educational background, is finance and management. I'm also a holder of a CFA certificate. I joined TAURON for the second time. My last position I held at the company is the director for mergers and acquisitions and investments, as well as the head of president of the three supervisor boards of the subsidiaries of the company. Over recent years, I dealt with strategic investments in Middle East, Western Europe, and Poland, working for customers in those countries in the areas related to the investments, transactions, capital transactions, equity transactions, and renewable energy. Thanks you. I hand over the floor to my colleague. Welcome, everyone. My name is Krzysztof Surma. Regarding education, similar as Michał, I'm also a finance guy. I graduated from the business management and finance at Katowice and Kraków Academy, and the CA member. Regarding cooperation with the group, I've been working for the group for more than 23 years. I went through all the ladders of the career, starting from the junior specialist to the president. Since 2009, I've been holding the position of a financial director at TAURON Polska Energia. And since August 2021, I had the pleasure to manage the entire finance area and perform the position of vice president for the finance. In my everyday life work, I manage the finance, controlling, and also purchasing now. Thank you. Good afternoon. My name is Piotr Gołębiowski. I am the vice president for trading. By education, I'm an electric engineer. My experience in the power industry dates back to 1995. For 28 years, I spent working for the power industry. At TAURON, 12 years. I'm a holder of the MBA degree. I've been specializing in the hedging strategies for generation assets, supply assets, sales on the retail market, and risk management in the power industry. Thank you very much. Thank you very much for the introductions. Ladies and gentlemen, we are happy to be with you. That's the first conference, live conference, in-person conference for a number of years. So let me remind you that the presentation, of course, is conducted in Polish, but it is simultaneously interpreted into English. Outside of the broadcast, you can also listen in to today's meeting via the teleconference mode. In parallel, for everyone who are in the room, in parallel, the questions can also be asked via the website of this conference call. So the questions are already coming. If you have questions and you're listening to us and you have some inquiries, please send them to us. Next to me, I have Paweł Gorzyński, responsible for the investor relations at TPE. My name is Łukasz Zimoch. I am the press spokesman of the group. So the time has come to start the presentation. After the presentation, a traditional Q&A session. Let me start by providing the large scale, the overview. Let me just introduce myself yet. My name is Grzegorz Lot. I'm holding the position of the President of the Management Board, CEO, but the ambition to be a leader of the energy transition and the transition regarding human transition. That's the signal for my colleagues to move on to the next page. The energy transition, technological transition, and also the transition regarding the organization people. This is the biggest capital of the organization, is always people, their passions and competences. And this is I'm an MA engineer, a graduate of Stanley University of Technology. I'm holding an MBA degree. I used to work for Vice President for Marketing and Sales in the TAURON Group. That's my domain, the marketing strategies, customers, new products and sales. For 10 years, I spent working for Vattenfall. The last 5 years, it was Polenergia. And since March 7th, myself and the team of my distinguished colleagues, we are representing TAURON Group. I do hope that's how we'd like to bring the company to the leadership position in our country. As I mentioned, our goal is to drive the competitive advantage. We have identified specific assets. People are the assets. Renewables is the assets, conventional assets. The distribution grid is the biggest value of that group, of that company. This is almost 6 million customers that we have to arm with green energy at very reasonable prices. The business core. This is an important prospect, how we're looking at the business. How we look at this group, how we look at the future of this organization. The business core is almost 6 million customers connected to the distribution grids that are purchasing electricity from TAURON Group. An ideal solution would be for this electricity to be 100% green and to come from our sources. The business core is the place that generates the biggest value and around which we want to grow our organization. On the subsequent slides, I will show our point of view, our perspective, but this is the main message I wanted to convey. What is our core, how we want to develop, grow, expand, how we want to create the value of this group and for our shareholders. We've been together for 40 days. It's a fantastic time to sum up certain activities that we undertook. We are still full of energy, green energy. We've managed to organize a number of things. Now we are focusing on developing the organization, the resources. We are building the team. This team will be the basis for achieving afterwards the goals related to the development, acquisitions, and creating the value for customers. Creating a value for us, these are four main perspectives that we are presenting today, but of course they'll be modified as the knowledge of the organization expands and the further business ideas. The first thing is that everything we do has to generate the sustainable economic value for the shareholders, for the investors. That's the first thing. Second thing, that is to bring tangible value for customers. These are the two perspectives. Shareholder and the customer is a holy grail for us, and from that point of view, that's how we view this business. The second thing is that we have to develop an organization along with its culture, corporate culture, that will be understanding our goals, the market, the customer needs, the shareholders' needs, and this will be the sustainable value, but irrespective of who's managing this organization, that this should persist and build value for a number of years ahead of time. That's our perspective. Another thing that we already know, and we are committing ourselves, we are focusing on very strongly, this is the growth, expansion of resources, renewable sources, not only in the form of photovoltaic, wind or hydroelectric plants. This is the full ecosystem, because today renewables also energy storage facilities. Renewables also include the distribution grid, the renewables storage facilities grid, that's also the appropriate supply of this electricity to the final consumers and creating value, especially when you take into account the new introduction of the new balancing market model, the appropriate placement of the energy to the appropriate group of customers, and accounting for those two perspectives will be the critical factor for developing and growing the economic value. And the last and equally important, last but not least, prospective employees. 20,000 people, our managers in the organization. We are responsible for creating the job, work positions for those people that we have, but the ones that we gain, and bring about such a situation that every person that joins the organization works for the benefit of the shareholders and customers with passion and pleasure. These are our ambitions. Okay, thank you very much. For the next slide. Definitely you will be asking us during this final session, Q&A session, and we are looking forward to that. What are the main growth prospects, expansion prospects we see now in this year and the subsequent year? The first thing that I've been mentioning all along, and that's probably also comes is derived from my experience. My character is a customer in the middle of a center of attention. Almost 6 million customers. We have a number of ideas. I will not be selling them right away to you, but this is the first perspective. The second thing is the issue related to spinning off the core assets outside of the organization. And this is a very specific issue. Let me explain. I can see even the questions that you will be asking in a moment. I'm already a spoiler. I see it on the screen. 2050, ladies and gentlemen, 100% of the customers in Europe will be purchasing electricity or consuming green energy from nuclear, from renewables. 2050, so 24 years ahead of us. 2040, we know what will happen on that year. It's 14 years. So please think how many things we have to do, how little time, how important it is to start it now, here and now. So for our group to offer to our customers, the 6 million of them, the green energy, we have to be able to invest in the renewables, renewable energy sources, build the ecosystem related to energy storage facilities, invest really large amounts of money into the distribution grid, its throughput, flexibility. We won't have to make our heat supply green. For that, we need a gigantic money. With a good offering to get such sources of financing, we have to bring about the situation so that in a reasonable manner, the so-called just transition is being talked about. We take this into account fully also from the social, financial, and technical point of view to spin off core assets, generation assets outside of the group. We have experience. We have spun off the mining assets. We have experience in that. We have prepared assets, generation assets in a specific group. So our organization is very well prepared for that. We did a lot of homework for a number of years. We've been working on that. So we have an interesting adventure ahead of us. Of course, probably will be working out the details, talking about the details during your questions. The decarbonization of the heat industry, one of the biggest entities that is offering both the distribution service and the heat supply service, is a very important thing, but also very difficult. The renewable assets, energy storage facilities, and the growth of expansion of the distribution segment. It's all interrelated to one another. If you look at to invest in renewables, to manage this energy very well, we have to be able to accumulate and place this energy somewhere. So therefore, heat is a natural element, a natural storage facility for our energy. The distribution necessary to carry out the transition, and also the storage. We're not talking about the large-scale storage, but also the distributed storage facilities. 6 million customers. Think about how big potential that creates for distributed energy storage. Financial stability, I don't have to convince anyone about that. My colleague is very orthodox in this area. Anything we do is subordinate to those issues, and we are grateful to him for that. Ladies and gentlemen, an extremely important for us thing is we are very much focused on the shareholders. Enormous respect. As I said, our goal is to develop, to create the sustainable economic value for investors. Therefore, a simple statement from me that during each meeting that we'll be holding, as if we are able to physically do it, we'll be directly communicating with you, we'll be reporting to you. So this is for us very important, a bit stressful, but very important event. We also know one more thing that we are raising now to the very strategic level is ESG. So anything that we do now in the organization, 40 days, we've been doing that. Although if you ask about specific actions, I can already mention a few of them. ESG, so any investment, any change, anything, any decision has to be taken from that point of view, because over the next subsequent years, the company will not get financing, will not be able to expand if it doesn't meet those parameters. We are very seriously approaching that. We are not questioning the ambitious climate goals, social goals. We simply accept them. We know they need to be implemented, accomplished, and we focus on accomplishing them. So thank you very much. I hope I didn't bore you too much. I have managed to inspire you. I'm awaiting the difficult questions. Let me hand over the floor to Krzysztof. Regarding the key financial data, this data is very good this year. Historically, the group topped 50 billion in revenue, including 8 billion in compensation payments. Regarding EBITDA, for the first time we managed to achieve EBITDA more than 6 billion, 145 million of EBITDA for 2023. We also achieved substantial net profit at the consolidated level, about 1.7 billion PLN. The capex also went up substantially year over year, about 10% up. Here we came in at 4.4 billion PLN approximately, and the net debt to EBITDA ratio, maybe not historical low, but still low versus the recent earnings of the group. This net debt to EBITDA is very important. My colleague mentioned this financial stability is key for the group. Of course, each of these data items I will expand upon further on during the presentation. Against the good financial data, the background of the good financial data, our operating data has been a little bit weaker. Regarding the distribution, we have a decline by almost 4% year over year, down to 51 terawatt hours. Regarding good operating data, here we have an increase of renewables production. Weather was a bit helpful, but also the new investment projects are helping that we are implementing by our group. Regarding the coal-fired electricity production, here unfortunately we have a decline, unfortunately, year over year. I will expand on that when I discuss the macroeconomic situation. Regarding the heat situation, here a slight decline year over year. Unfortunately, the heating seasons were a bit warmer. The outdoor temperature was a bit higher than usually, so therefore automatically the heat sales declined. Regarding the sales of electricity, this year it was quite flat, stable. The difference is 1% year over year. Let me hand over the floor to my colleague who will discuss the trading situation, market situation on the electricity market, and then I'll move on again to the financial data. Ladies and gentlemen, a bit of a retrospective view because a lot has been happening on the market. In front of you, we have 4 charts showing the electricity prices, performance of those prices, the gas prices, CO2 emission allowances prices, and the coal prices. So the 4 parameters that we are looking at with a lot of attention, and this is due to the fact that our trading strategy is closely correlated with an anticipation of the trends on the market, and in view of those trends, the hedging, securing our trading margins. So afterwards, when we discuss the financial results of the individual segments, you will find the reference value to the reasons for the given results. Ladies and gentlemen, let me remind you, and that's why those charts are over 2021-2023 time frame, that what result will be achieved in the given year is determined by the trading strategy developed ahead of time, even 3 years ahead of time. That's how it happened. Working as part of a risk management policy, especially the trading risk policy, management policy, we are guided by the sustainable or balanced and stable risk appetite when we take the trading decisions. So moving on to the characteristics of what has happened to electricity prices, let me draw attention to this very unstable year 2022, the year of Russia's invasion against Ukraine. In spite of the fact that it all began to develop in correlation with prices already in April, we had already the first symptoms back in 2021. If you remember, at that time there was an issue of an extension of a Nord Stream 2 license, and this had an impact upon the gas prices and subsequently the electricity prices, because there's a correlation that the gas prices, European gas prices, have an impact somehow on all the indices on the Polish market, and subsequently there was this boom, above standard increase of electricity prices. Let me remind you that the peak prices of 2,500 and peak prices were even 4,000 of electricity. The same thing happened on the gas market with a slight delay. The price went up to more than 1,400 PLN per megawatt hour. Of course, everyone was concerned about that because there was a deep energy crisis underway worldwide, and on the Polish market, all those indices really went sky high. However, taking into account what assets we have, what production of electricity we foresee from our generation assets, both conventional and renewables, we're trying to hedge ahead of time the margin for the 2023. That's what happened. Simply we sold volume, taking into account, of course, the hedging of the foundations, the CO2 and coal. And moving to 2023, we had about 80% of the volume secured. This later led to what we see on the first graph in the left upper corner. The spot prices are shown. This meant that we were a beneficiary, able to naturally take advantage of electricity buybacks that generated the appropriate level of a trading margin. Of course, the consequence of that is the fact that the inventory of coal is a natural consequence of that. As of the end of 2023, we had inventory of around 2.5 million tons, and that was a natural consequence of the fact that this coal, due to the economic situation and an attempt to build a stable level of margin, was left on the stockpiles. We'll be coming back to that. In the upper right-hand corner, you can see the situation on the coal market. There are two indices, the PSME index and one which is an index that generally characterizes. This is the index that is used on the Polish market, so weighted average from the transactions performed on the Polish coal market, calculated ex post after the month has closed. So that's why we have a situation where in July, first this price level from 10 PLN per gigajoule gradually, linearly was going up, but through the negotiation of the coal contracts, there was a step up. So it's 30 PLN per gigajoule. You can see the peak, and this throughout 2023 that level was maintained, whereas the ARA prices, the Antwerp, Amsterdam ports. This is the quasi-financial index, and here, through this information, based on this information about the energy crisis, this level went up very quickly. Coal price level up. So it's closely correlated to the situation on the gas market. So the consequences as follows: if the gas prices, and that's what happened through the quick filling up of storage facilities, began to build. So this is followed by the level of coal prices. Subsequently, in September, it began to drop. It turned out the situation is that the gas storage facilities have been filled up. We knew that around 83% on the European market were filled up. In Polish market, about 95% filling was achieved, so the prices started dropping. So now we have a situation that in 2023 we'll receive that the ARA prices, and the index ARA is well below the Polish PSMI 1 index, and now it'll become stable because it'll stabilize, because we have a situation where today we can say that the coal prices are going down, and this will lead to a certain trading strategies and actions to be taken in the subsequent years. Regarding the CO2 emission allowances prices, it's in the sideways trend. It was within the range between 60 and 100 euro per ton, and it's been moving within this range around 83, 88 euro for the December 23 product. Regarding the gas prices, the situation after this strong surge, dramatic surge in 2022, came back to normalcy. We have around we had a prices around 220 on the spot market. On the forward market was about 300 in 2023. So the index of delivery 2024, one can say that if one can say we've had a certain first crisis, we have this crisis behind. Now the situation is a bit stable. To sum up, the trading results of a generation segment are related to the fact that we've been developing the hedging for the position in the 2021-2022, which resulted in the adequate results in 2023. The same applies to the supply segment, so our retail supply. We were entering the year with hedging at the level about 90% for the mass customers. The business customers is hedged back to back, so in that case it was about 65% of the hedging level. A lot of customers are using now a very popular product that is indexed to the forward market price, the spot market price. That's why it was all those positions were additionally hedged during the 2023, which resulted in a relatively stable level of a margin in those segments. After a brief market presentation, we'll move on now to the macroeconomic situation very briefly, and then I'll move on to the data for the specific segments. Regarding the macroeconomic situation, last year it was adverse, it was unfavorable. PMIs never topped the magic level of 50 points. In addition, the GDP growth rate was around zero. All that led to the decline of electricity consumption in Poland, which reached almost 3% decline, which automatically has an impact upon the distributed electricity within our assets, within our distribution segment. Additionally, it has an impact upon the production of electricity in Poland. The second factor that had an impact upon this electricity production in Poland was the exports and the imports. We remember the 2022, as Piotr mentioned, when the prices were very high. Poland was an exporter of electricity to the neighboring countries. 2023 all changed. Poland became an importer of electricity, and those two factors, both the decline of consumption in Poland plus imports of electricity to Poland, led to the decline of the production by the energy sources, but it was spread not uniformly. We have privileged sources, the renewables, that has a priority in the merit order, that are used on a priority basis, and here year-over-year production went up by almost 30%. Subsequently, we had a growth with the declining market of a gas source, and here the answer is quite obvious. It was also shown in the previous slide. Significant decline of gas prices led to the situation where the margin on the gas-fired units was higher than on the coal-fired units, and automatically those units were also used more frequently than the coal-fired units. These two sources, renewables and gas sources, led to a substantial decline of the production by the coal-fired units, both lignite-fired as well as hard coal-fired. And for the first time in history, we have a situation where the production for coal-fired units is below 70%. It's a very significant change versus the previous years. Here we're also drawing attention to that because this has a major impact upon the production by our units at TAURON generation segment that are coal-fired, hard coal-fired. We move on to the financial data. Here we have a significant increase of revenue year over year. As I said, historical high, 50 billion PLN. This 50 billion, first of all, was caused by the price increases. That's why it's important to understand the slide before. We are hedging out of electricity in the preceding year. As a matter of fact, the electricity and the revenue from this electricity that we see in 2023 was contracted way back in 2022. That's why we see the increase of revenue year over year. That's the first major reasons. The second major reasons is an increase of distribution rate, tariff rate. This had a positive impact upon our revenue. And the third thing, a bit incidental, one can say, related to the legislation related to the issue of a compensation payment. These three factors meant that we achieved such a high level of revenue. As a matter of at the same time, the group generated a solid profit, close to 1.7 billion at a consolidated level. This is very important. This is not a standalone figure, but regarding EBITDA itself, this EBITDA, after we strip out the one-off factors, typical ones, it went up year over year by more than 50% to a value of close to 8 billion PLN. These one-off factors I will be elaborating on more in detail when discussing the individual segments. Regarding the results of specific individual segments, we are drawing attention to the most important parameter, namely the EBITDA. Here, invariably, our most important, most significant segment is the distribution line of business. Last year, EBITDA more than 3.5 billion PLN. For a number of years, the EBITDA of the segment represents around 60-70% of the total EBITDA. Last year, close to 60%. Last year, one may say, a bit unique, very high EBITDA generated by the generation segment, but I will expand on that when discussing the results of that segment. And one very important piece of information, EBIT in all segments was positive, which historically didn't always happen. However, from the time when we got rid of coal mines, this EBIT has been positive in all of our segments. If we move on to the summary year over year of the EBITDA growth, the key two segments that contribute most to this change, to this growth from 4 billion to more than 6 billion of the reported EBITDA. The key segment is the generation segment. Second segment is distribution. Here also I will expand on that, elaborate on that when we discuss the specific segments. Moving on to our most important segment, namely the distribution line of business. Here we are dealing, first of all, with a one-off event. This one-off event is the upward adjustment of the cost of the grid losses. This is not intuitive, as a matter of fact, because the cost of purchasing electricity for the grid losses went up year over year. However, the fact that this cost went up year over year, we have a model that is applied by the President of the Energy Regulatory Office, and that's how it is reflected in our reports, that we are adjusting up the actual electricity in 2 points in time, December and January, and since not all the, well, to rephrase it, the sum of the revenue is recorded according to the actual consumption, and some of it is estimated. Then when we make a revaluation in January, and this readjustment of electricity leads to the reduction of grid losses. The December grid losses are calculated according to the price of the previous year, and the subsequent year they are calculated according to the prices of 2023, and in December we are still the prices of 2022. This recalculation leads to booking out of some of losses, some of it balancing difference, because it's booked at a higher price. It means that it leads to the actual positive effect on the EBITDA. This positive effect, I'm drawing attention to this because when the significant change of this take place, it will stay with us for a year or two, unless we develop jointly with the President of the Energy Regulatory Office and the auditor a new model. Just as in 2023, it has effectively improved the EBITDA results in the distribution segment, but due to the decline of electricity price in 2024, it will be having a deteriorating effect upon those results. So if we stripped out that effect from the distribution results, then the distribution segment results would be comparable year over year. Although we have also the one-off event, those one-off events is the regulatory account settlement. The settlement of the regulatory account is the settlement from 2 years back. So when the volume of electricity distributed is higher than the one that was assumed in the tariff, then the surplus of the revenue from that is deposited with the regulatory account, and then plus 2 years it will be accounted for on a positive or negative manner. And at that point in time, it was so that we distributed more electricity than envisaged under the tariff, so it had a negative impact upon the regulatory account. The second bar, as we looked, the volume of sales, 210 million PLN now is charged to the result of for 2023, because the volume of electricity distributed by our grid was lower than the one assumed under the tariff. Effectively, it will improve the result of 2025. The key, however, for the entire segment, part of the result is the margin on the distribution service. Here we were dealing with a growth of WACC year over year. It went up to 8.5% in 2023, and as a matter of fact, it generated a substantial, significant increase of the result. And 2024, this effect will also be visible. Regarding the key parameters, quality parameters in the distribution segment, here, similar as in previous years, the parameters were fully met, either at the level equal to the target or within the permissible deviation from the target. An important piece of information is that due to the quality parameters, there will be no reduction in the subsequent years of the tariff, because all the quality parameters were met. Moving on to the renewables segment, here we were dealing with an impact, statutory legal legislation impact. Let us remember that in 2023 the electricity prices were blocked at the renewables at a certain level, which meant that year over year we were dealing with significant decline of EBITDA for that reason. However, on the other hand, we have a very positive effect. Year over year, we are having an increase of electricity volume, electricity produced by renewables. This is increase of volume is both due to the good hydrological conditions, namely we had a higher production output by the hydropower plants. At the same time, we had a higher production from our wind farms. the impact of the newly commissioned capacity and a good fourth quarter regarding the wind strength, the windy conditions. The negative impact comes from the decline of the prices of the green certificates. This is first of all due to the fact that the redemption obligation of the supply companies was reduced due to the reduction of the demand. Automatically, the prices of those certificates went down. If we move on now to the generation segment here, quite a complicated bridge. However, I will try to explain it. In 2022, we were dealing with very atypical events. Our unit at Nowe Jaworzno, instead of generating positive electricity, generating positive result for the group, unfortunately underwent a failure, and due to that failure, we had to repurchase electricity that was contracted from that unit. We were repurchasing that electricity at a relatively either a very high price. It was 2022. A year of a war, as Piotr showed on the previous slides. Therefore, we generated a substantial loss on those buybacks. It reached almost 1.2 billion. However, that loss was partly mitigated offset by the sales of carbon credits. Since the unit wasn't operating and the carbon credits were purchased, we resold those carbon credit because they bought at a lower price than in 2022 their price was on the market. And as a matter of fact, if we stripped out those two one-off events, we could say that the starting EBITDA to compare against the 2023 was the EBITDA in the region of zero, a bit above zero. But in 2023 we had a number of positive events and a number of one-off events that also to a large extent, substantial extent, had a positive impact upon the results. Let's start with the one-off events. The one-off events, the strengthening of PLN exchange rate, which meant that the valuation of a provision for the purchase of carbon credit that's related to electricity production was effectively valued at an operational level lower. So the reverse result was, since we are hedging it fully with forward transactions on the functional level, the result was reverse opposite. And finally, we signed a settlement agreement with Rafako. We got damages, payment of damages. We mentioned that during the previous earnings conferences, both as part of a settlement agreement with Rafako, but was the damages from the good performance bond and damages in a smaller part from the insurers. The second negative one-off event was the write-down on related to the assets at Tamech subsidiary. We were informing you in the current reports at the end of 2023. Liberty Ostrava stopped paying to Tamech Czech subsidiary with a daughter company of Tamech, our joint venture with Mittal, and then as a result of that, the Tamech Czech subsidiary announced its insolvency, and therefore we wrote off practically all assets in that company, both receivables and the substantial part of the fixed assets, which led to the negative impact year over year on the EBITDA of more than 300 million PLN. That's all regarding the one-off events. However, the key bar, the margin of electricity, this comes from what Piotr mentioned. In 2022, we hedged a substantial portion of electricity from that unit, and subsequently that margin as a result of electricity sold at a high price market was generated in 2023. It was generated both in the form of electricity produced as well as in the form of buybacks on the electricity market, as well as in the form of forcing by all the TSO introduced on the balancing market. That's why such a good result year over year. Of course, we talk about outlook for 2024, so the situation will not happen again. Moving on to the supply segment. Here the result year over year at a very similar level. Two small one-off events. As a matter of fact, the transfer of the entire a substantial portion of purchase of coal for TAURON generation, directly to the TAURON generation, related to the Another process, therefore, in this segment, we eliminated the margin on coal. The second one-off event is the impairment charge. A substantial increase of nominal electricity prices meant that the increase of receivables also went up. Therefore, the write-down that we book also due to the model that we apply also went up. In addition, there's a litigation dispute with one of the counterparties led to a one-off event. So regarding the marginal electricity, this you can see a small increase year over year, but inside of that there was a lot of happening, much smaller return on the SME segment, where the law blocked capped the electricity price at a certain level, a bit higher increase in the G tariff. Last year, the costs were fully passed on, fully covered. Last year, at the same time, year over year, an increase of margin on business customers in the region of 100 million PLN. Moving on to the slide related to the debt and financing. Here, a good piece of information I mentioned at the very beginning. The net debt to EBITDA ratio went down to 2.1 level. The main driver behind the decline of that ratio was EBITDA. It led to a situation where we have this net leverage rate at this level. So more than 6 billion of EBITDA meant that we had the leverage ratio close to 2, but the negative impact came from the debt issue. First of all, we are dealing with an increase of working capital, and this was brought about both by the increased coal inventories that Piotr mentioned already, as well as the matter of recording the revenue from compensation payments versus the actually paid out compensation payments. Some of those compensation payments for 2023 was paid out until April this year. That's why this cash flow was shifted and led to the increase of the debt level. And now let me hand over the floor regarding the capex. Hand over the floor to my colleague Michał, who will present the capex of the group. Ladies and gentlemen, let me start with an overall summary of the capex and declaration of the capex. Following that, I will move on to the renewables and give you more details regarding the renewables investments that we are currently implementing. Regarding our total capex, it went up year over year by 10%, and it reached 4.4 billion PLN level. The biggest segment regarding the capex was the distribution line of business, which, according to the share in the structure of EBITDA, we allocated 63% of capex to distribution last year. The majority of that capex was spent on the construction of new grid connections, about 1.5 billion PLN. The second largest part was the modernization and the replacements of the grid assets. However, the 163 million was allocated to the installation of the smart meters that we have more than 19% in our distribution grid, and we are on the good path to fulfill the regulatory requirements related to that. The second biggest segment regarding the allocation of outlays was the renewables. I will move on to the details regarding the implementation of specific projects in this segment. The majority of allocation went for PV farms and wind farms. Small allocation, 19 billion to hydroelectric power plants. In the generation segment, the capex was 568 million PLN. Here, 303 million was allocated to TAURON generation subsidiary. It was allocated for replacements and refurbishments, but also components used in overhaul projects and completion of a 110 megawatt unit in Jaworzno. This construction of this unit from the physical point of view was completed on March 21st this year. We completed all the acceptance tests with the TSO, and so from the point of view of investment project point of view, we consider this project to have been completed. And then we have a number of investment projects related to the heat industry, namely connecting the new facilities to the grid, to the network, expanding the heat market in Katowice by adding Ligota, the low emission elimination program, but also included the connecting to the TAURON district heating network, also the construction of sources at Bielsko, Katowice, and Energetyka Cieszyńska. Expenditures on other segments came in at 441 million PLN. Here, the biggest capex was allocated to the IT investment, 278 million PLN, and then 97 million PLN to maintain and expand the lighting, street lighting as part of a new technology subsidiary, and 14 million for the business service center. First of all, spending on the fiber optic network, co-finance as part of the Polish digital operational program. And now moving on to the renewables segment, let me start with the overall timeline of the expansion of our capacity and move on to the specific projects that are underway. So one can say that the green turn of TAURON has accelerated, and we are implementing a number of investment projects. At the end of 2023, we had 696 megawatts of installed capacity in renewables. In 2023, among others, we completed the construction of a photovoltaic farm, Mysłowice, 37 megawatts. We are working on preparing the second stage of this project. We acquired and we started the construction of within the special purpose vehicles that hold the PV and wind farms with a capacity of 235 megawatts. And also we have a certain joint undertaking with PGE that will be aiming to prepare an offshore approximately 1 megawatt wind farm on the Baltic Sea. Now in 2024 we have 8 renewables projects with 364 megawatt capacity underway, and we are planning to complete the construction of a project that will add to our generation mix 176 megawatts. Therefore, looking at what is being underway now, the planned capacity at the end of the year is 873 megawatts in renewables. What's important, as President Lot mentioned, we'll be working on accelerating this direction. We have a number of projects in the pipeline at various stages of our development related to the wind energy PV farms. We have both the clean projects as cable pooling projects in connection with our existing sources, as well as assuming the construction of both the photovoltaic as well as wind sources using the new capex, as well as the energy storage facilities and the renewables projects related to the storage facilities. So on one hand, we'll be working on increasing that number, introducing new projects for implementation, but also on the other hand, we'll be looking at further acquisitions, both at the ready-to-build level projects of level of the assets that are already in operation. But here the magnitude of our involvement and potential involvement will be first of all dependent upon the evaluation of profitability of various investment projects and the due diligence results examination of such assets. Moving on to the projects that are currently underway. Now our biggest project is the wind farm Mierzyn, for which the planned completion date is Q3, Q4 this year. The farm is moving ahead a lot in line with the schedule. For other projects also in the pipeline, Nowa Brzeźnica will be commissioned to Q2, Q3 2025, Sieradz Q4 2025, Gamów and Warblewo this year still. So in total now in wind we have underway 165 megawatts in implementation. Regarding photovoltaic farms, we have 199 megawatts underway. Bałtków and Postomino, 144 megawatts will be commissioned in 2024, whereas Proszówek Q2 24 is at the end of the construction process. It is worth mentioning that the Postomino PV farm is implemented as part of a pooling project along with our Malszewo PV farm. It's an interesting direction that will be also taken into account looking at our further sites. So much for the capex, and let me hand over the floor to Krzysztof regarding the outlook for 2024. Regarding the 2024 outlook, we have two segments that we expect a higher EBITDA year over year, and two segments we're expecting the reported EBITDA lower year over year. Why reported? Let me start with the distribution segment, because in the distribution segment, as I mentioned, we are dealing with a one-off event. This one-off event is the negative impact of a change of balance of but adjustment of balancing difference, as its impact was positive in 2023 on EBITDA. Now, in contrast, it will be having a negative impact on EBITDA, and this change year over year will be significant. However, if we were to skip this balance aspect, these costs covered, costs for the balancing difference, then, as a matter of fact, the EBITDA year over year in the distribution segment will be positive. The positive impact will come from the WACC increase. Here we have a substantial, significant increase, and again, now from 8.5 roughly to 10.5 percentage points, and this will have a very positive impact upon the results of the distribution line of business. A positive impact on the distribution line of business should also come from the revenue from other services, resolution of the collisions. They should have a negative, positive impact, neutral, a slightly positive impact should come from the volume. Volume, I assume, should be roughly flat year over year. So this is the outlook for the distribution segment. Regarding the second segment, that the reported EBITDA will be lower year over year. Well, the generation segment, and here indications why the EBITDA will be lower, we already provided in our presentation. Both Piotr and me indicated the significant decline of the price on the market. The margin went down significantly, CO2 went down, and the electricity prices went down even much more. So therefore, the margin on electricity will go down significantly year over in the generation segment. And the second negative factor that we mentioned at the very beginning, more and more the coal-fired units are being pushed out, especially our 200 megawatt units from the merit order, pushed out from the merit order. Therefore, we can only count mainly upon the forced operation on those units. So therefore, volume year over year is also weaker, which means a lower revenue in this segment. Besides, one more factor will have a negative implication. It's already been having effect for some time last year. But first of all, this year, new conditions, grid conditions came up. And as a matter of fact, they mean that any forceful operation of units that also operate in the cogeneration, generating also heat, are accounted for by the TSO in a much less beneficial way than in the previous year, which means that this will have also a negative impact upon the results of the generation segment. As a matter of fact, the only positive factor in this line of business year over year is the increase of the revenue from the capacity market. Here, in this case, we are dealing with simple mechanisms, an inflation-based mechanism. Increase of the revenue is the result of multiplying the up to now revenue by the inflation rate for the previous year. And that's all regarding the generation segment. Moving on to the second generation, namely from the renewables, because before I've been talking about the conventional generation. Regarding the renewables segment, here we see good outlook. And so in 2024, we have no price cap, so this should have a positive impact upon the results of the segment. The second thing that should have a positive impact is the volume. Here we are expecting that the subsequently commissioned investment project in that area will lead to a greater volume and higher revenue and higher EBITDA of that segment. The negative impact on the segment will be caused by, as it happened in 2023, will be brought about by the prices of property rights prices. We expect the green certificates on average year over year, the prices will be lower than in 2023. As I said, this is caused by the reduced level of the redemption obligation by the supply companies. And now moving on to the supply segment. Here we're expecting an increase year over year. Of course, we assume the current regulatory environment, and this increase year over year should be brought about first of all by the decline of electricity prices on the market. This decline of electricity prices on a not fully hedged position in previous years should generate a positive results on EBITDA. Regarding the capex level, here we assume an increase year over year. First of all, we assume an increase in the distribution segment and the renewable segment, especially in the last one. The capex year over year should significantly go up. Overall, EBITDA, reported EBITDA of our group will be lower year over year. At least that's how we see as of today the earnings of the group in 2024. And that's all as far as our presentation is concerned. Let's move on to the most interesting part, namely, we'll be awaiting your questions and we'll be happy to answer them. Ladies and gentlemen, we'll do it as follows. One question will come from the audience. The second question that was sent over the web. A few questions have already arrived. Let me remind you that you can send those questions via the broadcast website. The first question, of course, from the audience. You came. Please introduce yourselves and not more than 3 questions, because we have a lot of questions, then you can easily forget one of those. Thank you very much. Bartłomiej Sawicki from Rzeczpospolita Parkiet Dailies. I have 3 questions. The issue of timeline for decommissioning the 200 megawatt coal-fired units. That will be question with sub-questions. Let me put it this way. I wanted to ask about the number of such units that you forecast or envisage at the end of last year. I think once the capacity market has expired, that you foresee them to be decommissioned. How many employees, how many people are employed by those power plants, by those units that you plan to decommission? How many jobs? That implies. That's the first question. Second question, I mean the renewables expansion plan, because here from the presentation we can see that you have close to 700 megawatts of installed capacity, and based on what I've read in the reports, this is almost not less than 50% of the target of TAURON for 2050. The question is whether the target for 2050 regarding the larger capacity, if it's only 50%, will you be able to implement that, achieve that, accomplish that target for next year? And I wanted to ask also regarding the ČEZ assets, because supposedly they are available for sale. Yesterday, a representative of a corporation mentioned that, of a Czech one, that those assets are available for sale, but the point is mainly of the attractiveness of a sale was supposed to be based to be on the location, namely the Chorzów and Skawina. Those locations are attractive for you from the point of view of expanding the new or developing new generation sources. Thank you. Let me start, if you allow me. If I were to phrase that Chorzów and Skawina are very attractive or very unattractive, so I position myself in the potential negotiations, but my colleague will expand on that. It would not be good from the point of view of building value for the shareholders. My colleague Michał will answer in detail to your question, but let me phrase it this way. We communicated a certain piece of information when, in line with the formal legal situation, a process has commenced to shut down the 200 megawatt units. This is due to the capacity market issues, profitability, and so on. So theoretically, if we do not get appropriate financing for those units, then in January 2026, those units should not operate, at least majority of them. However, we have one declaration and one goal that says the following, that any changes that we do are done with respect for the environment, both the original one as well as the social aspect. So at this point in time, we are not discussing the number of people, the reduction of the number of jobs. This is not being discussed. So I'll not be referring to the number of people that are working there, because the topic regarding the hiring the jobs is not on the table now. We have so many investment projects to handle and so many topics to handle, deal with, that now any person at TAURON Group that wants to works and is engaged and wants to be involved with us definitely has a job. There's no such topic on the table. Let me emphasize it for shareholders, for you, for my employees and my colleagues at work. But this is the situation. But what we are communicating, we are aware of the fact that we are brave. We are bold. We are talking about that situation that says that on one hand, the energy market, electricity market in Poland during the transition period, I don't want to talk about the full transition, but there is a kind of like a transitory period where we don't have a sufficient number of green energy sources. We know that we have to exit coal. We have units that are required at a specific time, and we know that they will not earn money from electricity generation. We have to have a solution for that. So that's why we are communicating the situation, and we're looking for a solution so that handle the situation both from the economic and technical point of view. So the time now is there is no 0 or 1 yes or no decision about the shutdown, decommissioning, but I'm even convinced about that maybe in this transitory period of developing the new model, those units will be required in order to ensure that there is capacity at the time when there is no wind, there is no sunshine. The matter of finding a solution, the matter of finding a financing for that project to maintain this capacity. That's what's important for me, for you to know that we are communicating that. We are bold, but on the other hand, we are saying with determination that we are looking for a commercial solution for this project, but let me emphasize that it's not possible to discuss now any employee or labor issues. Okay, so not getting into the labor issues, but let me add information about those units. As of today, we have 200 megawatt units in Jaworzno and Jaworzno. 2 of them have a capacity market until the end of 2028, whereas in the other units, this capacity market, as part of the current contracts, expires as of the end of 2025. Apart from that, we have 250 megawatt sources in Siersza and 2 fluid-based smaller coal units at the Jaworzno 2 power plant, but we are also using the hard coal. As President Lord mentioned, we'll be guided by the financial calculations. We'll be looking for sensible solutions to make those units profitable, but we'll also be getting ready for the potential difficult solutions if no economic solutions have been found that will allow to extend the life cycle from the economic point of view. So that's so much regarding item 1. If it's okay with you, let me answer the plans for expansion of renewables and the chair's asset. Regarding the renewables, as we mentioned, we'll be trying to accelerate the renewables projects. So we have a pipeline that is significantly higher by volume versus what we have now underway, and we have to think about this project to plan them in such a way that they are profitable. There are certain challenges regarding profitability, especially regarding the PV. The transaction prices were still relatively high for the ready-to-build project last year. So therefore, we are looking for options, but will not be implementing non-profitable solutions in the renewable segment at all costs. So we are working on solutions to find solutions to do projects that will be profitable and accelerate the implementation of our goals, however, not at all costs and not in a way that wouldn't be building the value for our shareholders. So regarding the renewables and commenting on the last question, namely the chess, let me put it this way. We'll be analyzing various options, acquisition options, as part of our operations. Each time such an action has to have a business justification. There must be a business case. We must believe that such an acquisition will generate value for us, will be positive for the shareholders. I think that one of the elements of those considerations is also an option, whether or an opportunity with could operate under the zero or low carbon or zero carbon formula. Such project could operate from each case. We'll be looking at the added value to TAURON Group, whether potential diligence results will be positive and that will allow us to grow in a low or zero carbon way. I think that's it as an answer to the first question. So now questions from the web that you have sent to us. There are two questions regarding Polenergia. Well, the company will be aiming to find an amicable solution of court litigations with Polenergia SA. And another question regarding the same issue, starting from 2015, the company TAURON has been in court litigation with Polenergia Group subsidiaries. When does the company assume that the disputes will come to an end and the damages will be resolved? Up to now, judgments, rulings were not beneficial for the group. Now the group doesn't set up provisions for related to that. Why? Let's start. Myself, Krzysztof will handle and explain to you the financial issues, what the situation is. Well, ladies and gentlemen, as I'm referring to a previous project investment, the matter of buying some assets is analyzed by us in such a way how will this impact upon the value of capital invested in that company. So on the value of our company regarding the issues related to Polenergia company and the disputes that we have, we'll find a solution that will be best for the shareholders and the company. We will not answer the question how it will be done in detail, because I said we've been 40 days on board here. This topic is important. We are analyzing it. You can see how we operate, partnership, mutual respect, and finding a joint solution is always best, a common solution. Therefore, if we are able to find a solution that will satisfy both parties, this is good for the company and for the owners. That is the best solution. So we're always looking for a solution in a partnership manner. In the majority of cases, it is possible to be achieved, but there are situations that it's not possible to be achieved. And we do believe that we are able to finalize it successfully, but the details are still ahead of us. This process underway. I don't want to give you a yes or no answer, especially that in the question, as you wrote, that this is a dispute. Therefore, any declarations regarding the negotiating tactics should be a confidential element, at least. Krzysztof, yes? I will probably refer to the second question regarding the dispute. First of all, we should clarify that the dispute is at two places. The dispute is between Polenergia, daughter company, as a matter of fact, versus TAURON Polska Energia and the PKH, so the TAURON subsidiary. It is important because the judgments, the rulings that were issued versus regarding the daughter company, not TAURON Polska Energia itself. Here the dispute is still at the first instance level. Important piece of information is the fact that these rulings are regarding the principle, not the amount. So the legal point of view is of substantial important, but even more important thing is that the dispute is very highly complicated, because also our daughter company also sued Polenergia, brought a lawsuit against Polenergia due to the failure to perform over contracts that Polenergia was supposed to implement for the benefit of our daughter company, the contracts that the court told them to perform. So the issue is very complicated, so any solution that will generate value for the company will be taken into consideration by us. Why the provisions have not been set up? We set up provisions when we are convinced that such an outflow of funds will occur, or there's a high probability of such an outflow of funds will occur. And based on what we our opinion is and what our law firm thinks, the probability is, the judgment is that the probability of winning is higher than losing. So as long as we have the judgment and the law firm has this opinion, let us remember that the certified auditor is also looking at those opinions and also getting an opinions from its own law firms. And as of now, everyone shares this opinion, this position. So as long as this is our opinion, their position is, and there's no negative ruling, final binding ruling is not issued that would obligate the company to make payment, so long there will be no provision set up for that. Question from the room, from the audience, please. At the end of the room, yes. Can you hear me? Paweł Puchalski from Santander. Let's start with 3 questions. What are the company's plans regarding energy storage, or what capacity will be placed on the first auction this year, maybe? Second question, what about TAURON's plans that were once announced regarding the construction of 2,000 megawatts in gas-fired capacity? And the third question, everyone is now emotional regarding what is going to happen to the G tariff, price of electricity, but taking this opportunity, I'd like to ask a question. If the bill paid by the consumers to go up by more than a dozen PLN, I'm curious what will happen to the tariff, distribution tariff. I understand that the tariff for electricity is to change somehow. Don't you see a risk that the distribution tariff will be reduced so that the overall invoice should go up by more than a dozen or so PLN? Let me start answering the question regarding the energy storage facilities. Now we are in the process of developing our own energy storage facilities. We have a number of locations in the group. Regarding the detailed capacity per auction, final decision will be still need to be made. We are more about hundreds, not tens megawatts. This is a project that we plan to certify for the capacity market, but independent of that, we are working on the product that will be added to the potential renewables product that will be part of our acquisitions. This is the order of magnitude we are talking about. We had some general certification for some of the size, but regarding details, they probably still depend upon certain decisions that we'll be making over the next few months. Regarding the second topic, if I understood correctly, the question is about the gas investments. Historically, we had a project to build the unit large scale in Magisha. Now we are analyzing the options for this site. We are analyzing various volumes or magnitudes of sources that could be placed there. We are in the process of analyzing whether such investment project we should implement, but let's say that there are also variants with smaller sources that we are seriously looking at in this site. So as of today, we don't have a large-scale project that would be at the implementation stage regarding this fired project, and also we are considering various directions that will allow us to produce electricity in the cogeneration mode. But as I said, a large-scale, utility-scale gas-fired power generation is not being implemented now. Regarding the third question about the tariff, I would hand over the floor to Grzegorz and Piotr. Ladies and gentlemen, before I comment on what can be ahead of us, let me mention 2 things. But first of all, in our understanding, the regulator is trying to find a compromise for the interests of stakeholders, in this case the companies and the trading companies or the distribution companies. And the point is that the electricity tariff should always reflect the cost of the operations of the utility companies and their economic position, financial position. The second topic, you probably know very well what I'm driving at, is the fact that irrespective of what the level of electricity now is on the market, on the spot market or in the intra-year, the so-called, the majority of electricity, the overwhelming majority of electricity for the customers, we have hedged already. Therefore, there's a relatively small impact of a declining price on our profit and loss account and not leads to any windfall profits, excessive profits. So regarding the procedure, well, of course, this is a piece of information. It's a public secret that this process is underway. All the time we are strongly involved, engaged in this process along with the Ministry of State Assets. We are thinking about the best potential solution, a compromise solution that would give us an opportunity for us to exist, to operate in an economic manner, to sell electricity, and at the same time will give the customers with level of assets that leads to instability regarding the meeting of obligations, paying of invoices, so that there's no situation that due to too high a level of electricity prices, that the stability of obtaining the products such as electricity is affected. So the important thing is that we are talking about the fact that by the middle of this year we have the prices frozen. So we have a 39 PLN tariff in the part related to the trading operations, and the prices frozen to around 414, and this balance we get as part of settlements management as compensation payment. The second half of the year we are talking about now that the freezing can be limited. There are various options still on the table, and that would mean that the supply subsidiary will not be able to have access to such a level of compensation payment. That has an impact, of course, upon our financial result, financial earning, both the standalone TAURON sprzedaż and TAURON GZ, as well as consolidated earnings. And this is an element now of our considerations, our discussions. Definitely we expect that some changes will take place regarding the tariffing. Regarding the distribution tariff, you are right to observe that this tariff, there was no freezing of prices, but requires an increase. It calls for an increase. The level of price and the level of cost that would not be covered at this point in time, but so we treated this obligation towards the customers that the average level of electricity prices, including the distribution tariff, should not go up by more than a certain amount. Then, in my opinion, you should look at it in conjunction with reducing of electricity prices for the trading part, increasing the price for the electricity in the distribution part. Another question that was sent to us: what is the net debt of the company? The net debt is roughly 12.9 billion PLN. Let's go back to the questions from the audience. Good afternoon, Rafał Zachman from Portal High Voltage PL. I would like to ask 3 questions. The first question is regarding the G tariff and the draft law. Don't you think that it may happen so that the prices keep falling? Then next year the President of the Energy Regulatory Office will ask you to reduce the tariff. And then in such a situation, this contracting, optimistic contracting, may turn out to be too optimistic, because the draft act gives such an option for the President of the Energy Regulatory Office. Just to say in more detail, I mean this contracting is applicable to 2024, 2025. Also the majority was contracted already, yes? Correct? And the second question regarding the 200 megawatt units. So recently Enea, I think, demonstrated that the time of operating 200 megawatt units below to 4,000 hours. Can you disclose how much time your 200 megawatts were operating within some range? Because the load varies. Is it below 4,000 hours or maybe below 3,500 hours? And the third question is regarding the potential changes to the distribution. It's common knowledge what the coalition parties said before the elections about the spinning of distribution assets. This topic is not really talked about anymore. In your opinion, what impact upon the operations of the companies would have the potential change of the model of financing the group by the distribution segment? Simply limiting the ability to pay out the dividend by the distribution segment to the parent company and stripping out the taking out the distribution segment from the cash pooling mechanism. Thank you very much. I'll start, but as you can see, we are discussing in the meantime who's able to give the biggest value for you, answering the questions. First thing, do not argue with the regulator and the owner. That's the first principle. Therefore, ladies and gentlemen, since I will not be commenting and discussing the law that has not been signed into law yet, let me say one thing. Of course, once this law is signed into law, and I can declare here that once it becomes law, we'll get the best out of it for our shareholders. Of course, with respect for the customers, because this is the most important thing. So on one hand, it's a matter related to the fact to follow the law and be in line with the law and respect the law and do business on the other hand. So definitely we're waiting for this final decision. However, it is also important that our view is that our opinion that the free market is the best regulator, the best solution, and in the medium and long term, it will be profitable for all of us. I'm talking about the customers and investors. Free market, namely market price, namely the real margin, namely that means also competition, stimulating competitions, the biggest bargaining position, biggest opportunities for customers. So looking in the long term, I think I'm of the opinion that the free market-based solutions are best, especially that we understand also this issue related to the regulations. We had so many years of freezing of the price, it would be difficult to allow that it all is out of control for all of us, and the customers would have very high invoices. That's not the point. But looking ahead, we should be getting closer to the market-based price and free this segment as much, liberalize this segment as much as possible, especially taking into account the fact that in the moment the balancing market model will change. The portion of renewables in the energy mix will be getting higher and higher, and therefore the price differences between the individual seasons and the times of day will be getting bigger, and there will be more and more need for the so-called impulses and engaging customers in the electricity demand optimization. As a energy sector, we'll be trying to convince the customers to shift their consumption to the time when the wind is strongest and the energy that is cheapest on renewables is available. The dynamic tariffs are strictly connected to the price of electricity, and the success of implementing the dynamic or time-based tariffs is not just the technique, but the prices that are diversified will incentivize the customers to respond to the needs. That's one thing. I don't know if I answered the question. Maybe not in a way that could be put in the headlines. The matter of contracting for 2025, but Piotr will answer that. Well, here the answer is simple. I prepare myself for this question. We have 23% of electricity purchased for 2025 now. We have started hedging this portfolio in January, and we have linear, roughly, assumption regarding the hedging. However, definitely what will happen as part of the entry into law of this act will have an impact upon the pace of this contract, because you know there is a version that's being considered of setting the tariff level for the time frame longer than the end of 2024. So depending upon what will happen there, definitely we are considering, and probably such an option will be on the table. We evaluate or consider the acceleration of the contracting so as to hedge ourselves against the market risk ahead of time, by the middle of the year. But don't you think that if not everyone accelerates now, the prices will go up? That's a real risk. Let me note that we still have a situation where Since December 2022, the Polish Power Exchange obligation has been abolished. The companies can hedge their positions outside of the exchange market. So I think it's a formula that may mean, I'm not saying that this is definitely going to happen. It may mean that the level of this price will be at the right level. But provocatively, I can say that it's probably good that if the prices were to decline, then all trading companies will be able to hedge this product cheaper for the final consumers, and the tariff price will be lower simply for 2025. Yes, but it can go up too if everyone starts now buying. So the demand will go up. And in any direction, we want to optimize this purchase. Definitely, if we are talking about the issue of accelerating the tariffing for the 2025, as I mentioned before, our strategy of a balanced approach to risk management will be trying to a large extent to hedge this position this year, despite the fact that we are expecting that the spot prices will be lower than 2024. To add to that, what's your strategy? How much on the power exchange? How much over OTC? Yes, we have a strategy, but we will not answer this question. With all due respect for the shareholders, would reduce our competitive advantage. We don't want to do that. That was shown on the first slide. Let me put it this way, if I may join this discussion. It's one of the basic, of the most important elements now that we are working on is the fact that any interference into the model that is in place leads to this type of impulses or threats. It is so that the situation is as this. We have to face it. I think that this law and its final version will be published as soon as possible and approved. We have to get into the details regarding that, go through the entire process of negotiations with the Energy Regulatory Office, with the President of the Energy Regulatory Office, and we'll see. So this is all underway. It's difficult to declare now anything. We have to be a reasonable manager, and that's it. We believe in the wisdom of the regulator, the wisdom of the market, and the wisdom of the owner. And this is the direction we are taking, we are following. 200 megawatt units, let me put it this way. Yes, go ahead. I can put it this way. The first thing, we are observing that the load of 200 megawatt units is dropping. Even year over year, 2023 was a significant decline of the load of our 200 to 100 megawatt units. I don't want to give you really details, but 4,000 hours, I would say, is a relatively high number. Looking at realistically at what the load of this unit is. So these are looking at the full load equivalent, our figures are lower, and we can see that the process is moving forward, it's progressing. This year, the more renewables we have in the system, the more 200 megawatt units are being pushed out. Therefore, it's a phenomenon that will be more visible in the coming years, and that's why the discussion and our opinion about the potential decommissionings in case of a lack of support, because without the capacity market support, those units will not be able to sustain themselves from the market. Distribution, as you have seen on our slides, is our jewel in the crown of our company. Distribution is necessary to operate. On the other hand, it is indispensable to create a strong business model based on the customer distribution, renewables, energy storage facilities, and so on. So we are not analyzing or planning to spin off distribution supply. We are strongly tied to the colleagues from the distribution line of business, the entire distribution assets, and our plans envisage strong growth, strong expansion. We want to do everything that the profit, the value, the capital that is generated by the distribution segment is allocated in development, in expansion, in growth. This is the best solution, and that's it. What is the dividend from the distribution segment envisaged for last year? Regarding the dividend from the distribution, last year it wasn't paid out. That's one piece of information. I want to kind of explain this issue of payout or non-payout of dividend from the segment. So we have a central financing model. The distribution doesn't get financing on its own. Distribution is financed within the group. As a matter of fact, the most important thing is the level of capex in the distribution line of business. Of course, it could be financed internally through a lack of a payout of a dividend, of potential additional financing from the point of view of a group. It can be fully financed by the group, assuming that the dividend is paid out. So the very model, whether it's dividend is paid out or not paid out, doesn't have such a big importance that the market may think. As I said, last year it wasn't paid out. Here, let me say that this cash flow in the distribution segment, I'm basing myself on the data that's available, that's publicly available, so data for 2023. This cash flow in the distribution segment, I can say, was close to zero. So the level of generated cash versus the cash invested was fluctuating around zero. So it's difficult to say whether somehow we made it more difficult or less difficult to maintain the level of capex in the distribution. This level is dependent upon the capex program that we agree upon and the expectations, not based on the payout of a dividend itself. And referring to a question about the model of financing for the group, as the CEO mentioned, our entire model is based on the consolidated EBITDA of the group. It is not so that it's based on the individual subsidiaries. However, it's based on the consolidated EBITDA. So irrespective whether the dividend is paid out by the distribution or not, it is in fact included in the model, and from the financing model by the banks, it is treated as if it was part of one group. The banks are not asking us whether the dividend in the given year was paid out, and based on that give us financing or not. And similar with the question about the cash pool. Let us remember, the cash pool is an operational tool. As a matter of fact, it optimizes the daily flow of cash within the group, but it's not a source for financing in the medium or long term in the group. So therefore, in the given day, there's a shortage in one subsidiary, and the second subsidiary has a surplus, so we effectively balance it, offset it within the group, and this way we optimize the financial costs. However, the cash pool tool is not a formula to be used for feeding cash in the medium or long term, one segment based on the money from the other segment. Have I answered your question fully? Yes, thank you. So now the time for another question from the web. Do you have any projects to be implemented using the funds from the National Recovery Plan? What projects will you apply BGK for? Let me answer this question. We are of the opinion that National Recovery Plan can be a big opportunity for TAURON Group. We are getting ready for using a financing from that plan in various areas. The Energy Support Fund, that the biggest part of money is to be allocated to 17 billion euro, that is to be used for loans. It's definitely for us a great opportunity regarding the distribution segment. The details are not known regarding the way these funds will be allocated. We know that BGK Bank is to be the operator. We'll be closely watching it, and our intention is that we should finance the biggest possible portion of capex in the distribution using the aid funds, using the funds that could be allocated as part of a National Recovery Plan. Also, we are working and partly still working on that. Some of them is ready. Number of projects in the heat area, energy storage facilities, renewables, and modernization of the lighting management system. But we also use the funds from the National Recovery Plan. We hope that the detailed rules for allocating these funds will be developed in the post as soon as possible. And the biggest area with respect to the use of the aid funds, we assume that the distribution will be that area. But also we want to support other segments as well using those funds. Question from the audience. Yes, excuse me. Okay. Good afternoon, Andrzej Jabelski, brokerage office of PKO BP. I have three questions. The first one is, don't you think that it would be good to revise the model of reporting in the distribution, because your result after individual quarters was very variable in the first one? was around 1 billion, and the fourth one it dropped to 100 million. Other utility companies didn't report it this way, so one can see that this model could be more stable. But question one. Recently, we had a lot of confusion regarding the core assets, and maybe instead of again asking about any speculations, let me ask realistically what is happening in your daily work today. I don't know whether you're preparing a strategy only for your assets or in cooperation with other energy groups. We are preparing a joint strategy, a common strategy, or the owner of such process is more of a ministry, or you just supply data. That's the second question. And the third question, also in the context and inspired by the discussion about the G tariff and generally electricity sales, don't you think that a bigger problem for you is becoming the short position on electricity supply? Definitely a high one, with emphasis on the G tariff, but you can see that this segment is really under fire recently. So that's my three questions. Thank you. Let me answer the first question. That's true. You're right. This quarterly distribution is not uniform in our segment. We, of course, also are looking at that. To a large extent, it stems from the prices that the company, or the cost of the balancing difference that the company has to incur now. Of course, we are dealing with very strong fluctuations year over year. On one portion I already mentioned during my part of the presentation, it stems from the model of the Executive Office, President of the Executive Office model. At least other companies, at least the biggest one, has a similar model in place. I'm talking about the changing the balance of the upward adjustment. Regarding the second issue of this non-uniform distribution quarter to quarter, we have uniformly distributed revenue and non-uniformly distributed the cost of the balancing difference. The cost of the balancing difference is much higher in winter quarters than one can say. So in Q1 and Q4 especially, you can see that it's visible in Q4, and much lower the cost of the balancing difference happens during the summer season. We are discussing jointly with the company the subsidiary, how to spread it more evenly, and it's possible that in the subsequent years we'll be showing a more uniform distribution. But as I mentioned, this is stable, uniformly distributed revenue over the year, and non-uniformly distributed the cost of the balancing difference. That, as a matter of fact, meant that we had weak result in Q4 and much better result, especially in summer quarters. It's okay? Another question. Coal assets, a favorite topic. We are focusing on TAURON Group. So anything we do is related to this company. And on one hand, we are looking at it, how to implement the growth strategy, renewables, grid, and customers orientation. That's one perspective. And this is short, medium, and long-term perspective. The short-term perspective is the 200 megawatt units that we have to find a solution, how to finance the maintenance, the operation, or to find another solution such as decommissioning. But we are analyzing it, and we are fighting to sell this capacity on the market for the economy, because we know it's needed. That's one point. Regarding the overall worldwide global model, Poland-wide, we are reading in the newspapers, and the Ministry of Climate or Ministry of State Assets is the owner of that process. I would rather not speak about this topic, because I can read it in your newspapers, all this information. We are focusing on our company. Okay, thank you. Okay, the final question. You had the intention regarding two issues. I suppose what you're referring to, let me expand on that. Regarding our operational business, we are hedging the positions based on the risk minimum, risk neutral position. So we're trying to hedge any supply subsegment separately, but assuming that this is the most probable item to be hedged. And regarding the mass customer segment, this is a formula of a gradual follow the market formula. But regarding the business customer segment, this is a back-to-back. So any contract on the sales market, on the supply market, has an equivalent contract on the purchase market. Of course, within a certain risk mandate, there is some mismatch between these issues. What products are tradable, for instance, quarters, months, and so on. Then there is some open position, but we are trying to take advantage of a correlation effect and hedge it with other products. And I'm saying unequivocally here that we are applying not a short position policy, but a neutral position policy. But you're probably referring to our simplified balance of production from the TAURON generation assets versus our sales supply portfolio. But true that our stable, and we expect that over the next some time, stable production will be roughly between 10 and 12 terawatt hours. If the volume, renewables volume goes up, will be increasing. But as of today, I know that over the next 3 years, the 12 terawatt hour level is a production output that will be able to generate, and the demand, as you know very well, based on the portfolio, is 30 terawatt hours. So we have to buy a lot on the market. A preferable trading place is for us the Polish Power Exchange, generally the anonymous platform. So we think that this is a place where safe trading can take place. Of course, the margin economy is burdensome, is cumbersome, but it's a good platform because of the security of the transactions. And of course, inspiring the market participant to trade on this platform gives us something that cannot be overappreciated, the stable market index. So this is something that we use as a reference in cooperation with the customers to develop products, to apply pricing models to negotiations. A very important, in our opinion, thing. So I mentioned before about the power exchange obligation regarding the direction. We are of the opinion that the power exchange obligation could make sense if there's no other way to stimulate to market participants to trade on the Polish power exchange. That's how I would put it in an arbitrary manner. However, it doesn't mean that we will not be willing to take advantage of a bilateral market for hedging our positions. Definitely, we will be applying various forms of long-term contracts, the so-called PPAs. So this is how we'll be stabilizing this market. But I agree with you that having a trading position regarding the short structure is a certain challenge. There are entities that have a long formula in place. It's clear that we'll be forced to purchase more electricity from outside the group. Now, the question from the web. Net debt increased quarter over quarter, driven by the net working capital. Can you comment? Is it related mainly to state compensation? Where will this movement reverse? And net debt went up quarter over quarter. It seems that the reason was a change of the working net working capital. Can you confirm it? Is it related mainly to the compensation payments received from the settlement manager? When will this situation reverse and normalize? Well, already during the presentation, I said that the deterioration of ratio is due to the worsening of the working capital position. That's true. That's related to the settlement of the compensation payments. They are applicable to last year. They are being settled this year. We expect that due to the planned expiration of compensation payments, a lot is dependent upon regulations. It's a matter of this being reversed on the net capital. This should take place this year. Situation should be reversed. And a question from the audience. Good afternoon, Marek Szwedzki, Reuters. I wanted to refer again to the statement of President Orłowski about the renewables and the pipeline of the project. Understood that the pipeline is greater than what is being implemented. So therefore, two questions, if I may. What's the order of magnitude of project that you're looking at regarding acquisitions? And does it mean that you have a chance to have the level of green capacity at the end of the year to be higher than what we are showing, and what that level could be? Thank you. Well, let me put it this way. Our pipeline is made up of several segments. The first segment is the own in-house development, and this is, we have communicated historically. The PV farm in Mysłowice will have an operation to do the second stage with a capacity of more than 50 megawatts. We'll be doing such a development commercially outside of the land owned by TAURON Group as part of the TAURON Energia subsidiary. So this is part of the pipeline. We also have the so-called hybrid development, so the contracts with developers that are related to the purchase of project. Once they get the ready-to-build status, we have a connection earlier. We wait for project to pass all the milestones, and then such projects we acquire. But we are also looking at the acquisitions of projects under the ready-to-build formula. So with a full permitting process behind, and the acquisition of the projects that are already in operation or under construction. I don't want to refer to the detailed figures because this pipeline is live every day, taking advantage of the Power BI. So let me put it this way: there are different stages of development. Some of them have no grid connection permit yet in place. So looking at the vertical portfolio is several times higher than what we are implementing. So this is the order of magnitude, but doesn't mean that all those projects will reach the implementation level, because as part of the planning process, especially with respect to the grid connection permits, obtaining of those permits, some of those projects will be disqualified. So what could be included this year is the ready in operation with farms. So we are looking at the exhibition. We have the different stages of progress, but we don't want to make declaration because we have to have a good relation between the purchase price and the profitability ratio assumed by TAURON. So it's difficult to, if we can manage to win those processes. What we declared is the result of today's pipeline. We'll try to increase it, but the three parts of the portfolio we are growing will not be contributing to the capacity this year, because the construction process that will start this year will materialize next year or in 2026. However, we managed to do an acquisition. We'll be trying to do it, but it has to be profitable. It has to make sense from the point of view of building value, creating value. Let me just add another question. I'll try to ready to build and ready. What is the pool of projects that you're looking at? Let me put it this way: with ready projects, the situation is such that there are certain transactions that are being initiated. Then there's an offer of non-binding offers, the due diligence, binding offers. So usually it's a relatively short period of time. Usually it's single projects that are as part of a transaction. This pool is alive all the time. The transactions start and fall out of the pool. So it's alive. It's not a longer pipeline. However, the projects, ready-to-build projects at an early stages, are the projects that are maturing for longer time at different stages. So therefore, we're talking about much higher values. There are at least, at various stages of development, hundreds of megawatts, or maybe even more, that are being prepared for the potential ready-to-build transactions. However, they could materialize at various points in time, depending upon the permitting process evolution or trajectory. Okay, another question from the web then. How is TAURON preparing for the change of ESRD directive and new ESRS disclosures? Of course, and we understand that starting from next year, we'll be obliged to report in this regard. So we'll be reporting for 2024. We'll set up a special team for that. As a group, also, wherever we have doubts, we'll be using the knowledge of external advisors. However, the most important thing is that the entire team is working on to make that report, be able to publish this report next year. Another question from the audience. Paweł Puchalski once again. I'd like to add another question. What level of working capital we are talking about this year? And the second question, TAURON has its share in the offshore project. Is it planning to develop it on its own, take part in the auction, or will it be as part of a consortium of PG and some other partner? Or third thing, the question was raised here about the net debt. However, I would be a bit curious here, because I would be very happy to see in your presentation that overall the total net debt, including the green bonds, but also the unpaid invoices for CO2. Here I don't want to glorify another company here, but another energy company presented this way the economic net debt. If we open to the customer and our customer is also a fund and so on, so it would be worth to show it towards the true debt. Well, the working capital, we expect the reversal of this working capital will not be spelling out the detailed values. We just provide estimates. So here I will not give you the precise figure, but definitely it'll be done better than last year. Let me answer right away. The economic net debt. We know the presentation of another large energy group. I understand that they're showing it. In that case, let us remember the issue of CO2 emission allowances, and the provision for it has a much different weight than a TAURON group. Of course, we could consider the presentation. We'll discuss it in the context of this customer open attitude regarding the hybrid bond. Well, I can give you in the report it is stated, it's provided, but that's true. One would have to walk through a number of pages of a note to get to that. The level is about 2 billion PLN. So this is that would be the difference between net debt if it were to be increased by the hybrid bonds. Of course, with some error for margin, because some of that bond, some of the debt is in euro, depending on the FX rate as of the end of the year. That's at least the order of magnitude. I would respond to the question regarding the offshore. As of now, we are 45% partner in the Baltica 7 resort. It used to be PG Baltica 4 Ltd. So we are now partners in that venture jointly with PG. One could say that the development alone by TAURON under today's ownership structure would be difficult, but we are in the process of discussing structuring this project along with PG. Our intention is that jointly, as part of a shareholder group, to bring about the project to be ready for auctioning and ready for development, for construction, and carry out this project. But as I said, we are in the process of working out the details of a model for the implementation of this project. Okay, and the question from the web. Does TAURON want to increase its role on the heat market? Let me answer this question as well. I would look at the heat market from several points of view. The first question is that we are the owner of the heat district heating networks, including the Silesia and Dąbrowa metropolitan area, which feeds a large portion of this area. So the cities of Chorzów, Katowice, Dąbrowa Górnicza, Sosnowiec. So this is a large district heating network system that we want to organically increase the number of customers connected to the network. The district heating network is a good competitive solution. Also important from environmental point of view, we'd like to organically increase the number of connections to the network. The second element is our generation assets for this district heating network. Now a large portion of customers as part of Silesia and Dąbrowa metropolitan area is supplied from external sources. We know that the heat market must be decarbonized, transition, transform, and we are working on various concepts regarding the project in this area. Depending upon the profitability of those investment projects, may happen that it will be more effective, more profitable to increase the number of our in-house sources in this district heating network. But it all will be the result of economic calculations, and this way our share in our district heating network, where we have a network, could go up. So we want the district heat market to grow organically. We'll be looking for alternative solutions that, as far as generation sources are concerned, that also have an impact upon increase of our heat generation. Now a question from the audience. I'd like to refer to the answer on the issue related to electricity prices, the draft law. Both you've seen this draft that's already published, and if I may get an answer from you, confirm or deny. I understand you'll be paying some charge, some allowance due to the fact that the maximum price, the price cap is in place, but there are compensation payments. If there are compensation payments, there will be some right of some charge, some allowance. Because frankly speaking, I wasn't able to find out based on the draft. Maybe you can confirm or deny that. And also, regarding the same issue, understand that you are 23% contracted for next year for the delivery in 2025, 23% contracted. And I understand that by the middle of May, at the time when you'll have to submit your tariff applications, to have a majority of this volume contracted for 2025. Regarding this comment on the draft act of law, I am not able to answer your question. There are several unknowns yet. We ourselves do not know the details, operational details, how to implement this intention that's in the law, the act of law. Definitely it will happen this way, but a new price cap, freezing price of 500 PLN comes up, and in reference to that, and the freezing between the 500 and some Y price will take place, but the Y price is not known yet, so we don't know what level it is. If it wasn't for the partial departure from price freezing, then we would say that difference should be naturally between 500 and 739, simple as that. I suppose it's not going to be that way, but regarding the issue of what you touched upon, the second question, what we are planning to do regarding the level of hedging, for now, the 23% level, they gave us the comfort that if we hedge until the end of the year, we'll reach around 80–90% hedging contracted, expecting that on the spot market we'll have to optimize this position in 2025. This is this level of hedging the market risk that works for us. Any form of accelerating the administrative process of approving the tariff for 2025 already introduced certain pain to the system and to the model itself. Then we'll have to accelerate very quickly with hedging both on the forward market as well as taking advantage of this opportunity of the ability to offset to net the position from the generation position, because that's probably what we'll be doing, because we want to avoid this being exposed to risk. We don't want to find ourselves in a position where we latch on a sales price and due to some uncontrollable impulse on the ETS, the electricity price will go up and will not be able to make it with quick actions to stay within that position that we all we are exposed to. Okay, so another, I do hope I haven't made a question from the web. Can you give an estimate of distribution one-off related to grid losses and cash or non-cash elements? So in Polish, can you give an estimate for this year regarding a negative impact related to the grid losses in the distribution segment? Is this a cash element or a non-cash element? I understand this is really applicable to the one-off event generated around 600 million EBITDA in 2023. So the pricing effect regarding the balancing difference balance, I expect that this year is going to be around 400 million. This is what should be the estimate effect. However, it is a non-cash impact. Okay, another, if there are any questions from the audience, I can see. So another question, excuse me, I can, another one more question, if you allow me, a bit philosophical. The electricity price freezing system, as a principle, as of the end of 2022, was to be self-balancing. That was the argument. And your profit of 8 billion from the compensation payments and more than 800 million PLN of a charge of a write-off didn't balance, didn't offset. So I wanted to ask about the reason. Why didn't the system self-balance itself, and the budget had to add 12 billion for last year to the system that was supposed to self-balance itself? Well, let me answer, touching a number of issues related to that. First of all, 8 billion was not profit. 8 billion was revenue. So that's a major difference. Regarding the difference between 800 million charged to the fund and 8 billion in our group, let us remember that as a principle, the charge was done in the trading and the generation segment, whereas the compensation payments were applicable mainly to the G tariff and to a small extent SMEs and JST. And taking into account the generation line of business versus the supply segment position, as you noted earlier, we have a big disproportion because of the generation segment and the supply segment. That's why the difference. However, the system, the question is not to us, as a matter of fact, the system was supposed, someone who made this calculation at the central level was supposed to self-balance itself, so it was to balance itself from all generating units plus the payout of compensation payments and the profits from all the trading companies. It's not a question only to TAURON whether it was calculated correctly. The question of this 8 billion, because it's confused often. It was, as a matter of fact, a difference. I'm talking about the D tariff, the difference between what the customer, as at the end of the had invoice of 400 plus PLN and what was agreed upon in the President of the Energy Regulatory Office tariff. The tariff was based on the cost of electricity hash and the justified cost of the supply segment. So it's not so that we got 8 billion in revenue. We got a compensation payment between the difference between what the customer had on his invoice and what we agreed upon in the tariff from the President of the Energy Regulatory Office. That's what the amount came from. As I mentioned, we are one of the largest players on the supply market and a relatively small player in comparison to our largest generation company on the generation market. That's why the disproportion between the amount charged to the fund and the compensation payments received. And now a question from the web. What about the plans regarding the dividend from the profits for 2023, and what dividend policy in the future? Well, let me also answer this question. Well, regarding 2023, that's why I was emphasizing that we have a profit at the consolidated level, but the dividend is paid out from the standalone profit. We had a loss on the standalone level, so this year we'll be asking the general meeting of shareholders to cover the loss incurred at the standalone level from the supplementary capital. Regarding the dividend policy in the subsequent years, of course, here we have a clearly laid out dividend policy, and we'll be doing our best that in the future the shareholders get the dividend. Of course, we have to do it sensibly, so we have to. Up to now, the company has been relatively highly indebted, but I do hope that thanks to implementation of our capex projects, we'll have an increase of the value for shareholders from the point of added value of the group and the potential increase of the share price on the exchange, and ultimately the group would like to pay out dividend for the shareholders. Okay. Another. Why distribution segment EBITDA was only PLN million in quarter 4 23, when the balancing difference revaluation seems to be positive, deducting 9 months from full year. So in Polish, why the EBITDA of distribution segment in Q4 24 was only 100 million PLN? Why the balancing difference seems to have a positive impact in Q4 last year? Include, when you deduct the value for the entire 23, the value for the 9 months of 23. Well, it's difficult to have an unequivocal response to this question, but understand that the assumption of showing the quarterly results is to show it quarter over quarter. So we are showing, as a matter of fact, Q4 2022 versus Q4 2023. And the main element that differs, there's a difference between the two quarters, is truly the cost of the balancing difference. I said before, there was no uniform distribution of that over the year, but also a high price of purchasing electricity for the balancing difference, so for the grid losses to be precise. And this difference year over year is 800 PLN. So in Q4 last year, the cost of purchasing electricity was 800 PLN lower, and in addition, it's compounded by an increase. But because this year, quarter over quarter, there was way higher, the grid losses were higher. So if you add to that the volume multiplied by the price increase, quarter over quarter, it led to such a big difference. And as I said, why between quarters the difference? Because we have a uniformly spread distributed revenue. So revenue in 2023 was significantly higher due to an increase of the tariff rate. However, we have a non-uniform distribution of the balancing difference. So the grid losses are non-uniform over the year, and we are reporting also not in a non-uniform way. And as I said, adding to that a significant increase of the price year over year, that's why the big differences between the quarters. Okay, I declare that the last 3 questions we have, so I'll inform you that this is the longest conference we had over the last 5 years that we had, so that you know that you're taking part in a historical event for TAURON. You're declaring, gentlemen, that's the first of the last 3 questions. You're declaring, taking care of the shareholder interest. For years, TAURON has been implementing CapEx projects well below the cost of capital. Well, will this change? Let me answer this question. I will partly disagree with this question, because the biggest CapEx we are allocating to the distribution segment, that is based on the regulatory WACC that, in our point of view, compensates offsets the cost of capital. Regarding the other CapEx project investments in the renewables, here also there were no write-downs. We are of the opinion that this investments at the appropriate level of profitability. Of course, the group had certain investments in coal assets that was partly written down, and definitely that was related to some of the projects. Let me answer that we as a management board, first of all, are guided by the economic ratios. We have an investment committee that has 3-4 members of the management board and the key directors, and each time we are evaluating the profitability of a given project based on the discounted cash flow formula. Also, less related to the very implementation of the project. What's important, we're trying to optimize this project potentially regarding the technical provision, the selection of the best projects that are then implemented. Of course, entire economic evaluation of those projects is dependent upon the assumptions, and here we are trying to work intensely to have a realistic approach to the assumptions, especially regarding the price trajectories, which are a key element of elements related to the generation, also other operational elements, and to benchmark them versus the assumptions provided by the external providers, assumptions based on our current investment projects, the assumptions based on the construction contracts, and a number of other agreements, contracts that are concluded at the stage of preparing a project. First of all, I don't think this true statement is true regarding the majority of the CapEx projects historically implemented by the group. Secondly, we are declaring that each time we are guided by the economic calculations when choosing the investment projects for capital allocation. The penultimate question: how do you evaluate what would be the compensation payments for you in 2024, 2024 for the G tariff? Will you be on the positive side versus the frozen 500 frozen tariff of 500 PLN per megawatt hour versus your hedged price? Yes, that's our opinion. That's what we think. Now the development is such that it seems that the costs that we incur to hedge the 2024 tariff will be included in the compensation payment, covered by the compensation payment. That's what we hope, but it's not our own judgment, but this is what will actually happen. And ladies and gentlemen, the final question this year: will the Sustainable Development Report was partly prepared or partially prepared for the ESRS guidelines? Well, ladies and gentlemen, we have an assurance that all the reports that we have prepared meet all the legal and formal requirements. So this is a requirement for this year, but I guarantee that's how it was. However, if it wasn't 100% required, so definitely we are preparing those reports. We already took into account all the requirements that will be done for this and the subsequent year. Either it's one-to-one implemented, or maybe it's prepared based on the future convention of the future requirements. I hope this is sufficient explanation. Let me add, as I mentioned before, for 2025 will be fully publicizing in compliance. According to this report, we have to audit it. We have a report. This team is preparing this report for next year. So next year will be fully compliant with the ESRS guidelines. Okay, ladies and gentlemen, you asked all the questions. We answered all the answers. Thank you very much for this meeting. We wish you a pleasant weekend. Let me just remind you that I'm inviting you to the next meeting directly after publishing the Q1 2024 report. We'll notify you of the date of the conference in a traditional manner. Wish you a good weekend, pleasant weekend. Before the pleasant weekend, finally, in the beginning I told you one thing, that people are the power. So let me put it this way, that the team that's sitting in front of you here will do our best, that you as shareholders are happy and proud that you hold our shares. And briefly, just to know how we operate, the summary: this guy is building and looking for new assets and making sure that our grid is operational. This guy is collecting money for it and reporting how we are doing, and Piotr is packaging it all, hedging it all, and delivering to the final customers. So combining assets, combining customer, and doing reasonable return on that. This is the free. I'm trying to provide support for my colleagues and not to be an obstacle for their operations, but I declare once again that will be in this group, this team, for the subsequent meetings, and I invite you to the next meetings. I'm looking forward to further difficult, challenging questions. Thank you very much. Thank you. Thank you.